Hi, it's Larry Gaines, Power Cycle Trading. I want to show you today a couple things that I noticed in the markets, and one is based on Apple and the other was on the NASDAQ 100. But before I get started here, you know, they say the old saying is sell in May and go away. But I just wanted to throw out a statistic here to start this video. You know, this strategy works except when it doesn't. So note that the S&P 500 fell in May 2010, 2011, and 2012, but was up in 2007, 2008, 2009. So it works when it works, and it doesn't when it doesn't. So wanted to throw that out so that, you know, that saying goes around a lot. Last 3 years it's been true, and 3 years before that it was not true. So it's really kind of a coin toss. So what I'm going to show you here is that Apple, you know, broke out on this trend line here on the daily. And it also broke out on a weekly, a longer term time frame. Let me show you that. Now I like Apple here for a couple of reasons, like I mentioned. One is if you look at the monthly time frame for Apple, you can see from the low that was set back in 2009 to the high that was set back in 2012. This is on a monthly time frame that your 50% retracement level was right here at 389. So Apple came down, held the 50% retracement. So now what is next for Apple? Let me show you the weekly time frame. Now here's the chart of Apple on a weekly time frame, and we have a trend line coming down here, and for this week it would be taken out at around 450 in that range, and then you've got the 382 which comes in right above that at 463. So, you know, trading is all about probabilities, and I think that with Apple moving up on the daily time frame and the monthly having hit the 50% retracement and held on that and moved up, I think there's a good high probability that we're going to get to 450 this week. Now that being said, you know, with the broad markets moving down lower and hard today, if they continue that downtrend Thursday and Friday, you know, that could negate this. But barring that, if that was not a headwind going forward, Apple looks like you know, it's going to be targeting that 450. And another reason for that is based on the open interest on the options that expire Friday. Now here's the option chain for Apple, and this is the these are the options that expire May 3rd, which is Friday. And if you look at the open interest here, you'll see that the highest open interest is at the 450 strike right here. So over 12,000 contracts. And then the on the put side, the highest open interest is at 440, which is 26,000. No, excuse me, open interest right here, which is the highest open interest is down at 425, which is 7,000. And then 430, which is 69, let's say 7,000. So the area of interest for this pinning is around 435. That's at about 5,000, 430. But if you look, it's all skewed to the upside. There's more volume on the option open interest to the upside than there is to the downside on the puts. So a lot of times this will indicate direction of a particular underlying. So looking at the 450, looking at that trend line that comes in there, and looking at the breakout that it had earlier in the week, I'm looking for it to probably test that 450. Now, you know, again, it's probability. So the way I am playing this is I bought the 440, 445 call spread at around $1.80, and it's currently right there at $1.80. Now, you know, if that would be the max I would lose, is $180 contract. But if it goes to 450, then that's a $5 spread. My potential gain I could make on that would be $320 a contract. So, you know, it's a good risk reward, good defined risk type trade if you want to try to play for that 450 strike. Now that being said about Apple, there's always some conflicting information or conflicting signals within a market. And one thing that's very interesting, I've been talking about this inverted head and shoulders for months and months and months since it happened. And by looking at inverted head and shoulders, you can get, you know, targets of price movement. So, basically what you do is, here's the shoulder, here's the head, here's your other shoulder. This was back in October, this was November, and this was in December. So you have this inverted, what they call this pattern is an inverted head and shoulders. Here's a head and shoulders here, up here, and then this is the opposite, inverted. So what you do on these type of patterns is you look for a neckline. So it's not exact, but here's pretty close. Right here, this is kind of the neckline, and that comes in at 2684. So you take that neckline, and then you take from the neckline, you go down to the low of where it stopped right here for that head, and the distance, you take that distance. So the low there was 2482. So you take the distance of this 2482, subtract it from the neckline 2684, and you roughly come up with about 203 points. And then you add that 203 points to the neckline here, and it gives you a target to the upside. Now the interesting thing is, the target to the upside based on that comes out to about 2888, 2890 on the NASDAQ 100. So let me show you where that target would be. Now that target would come in at around 2888, 2889, and you can see today we came real close to hitting that target, which came in today's high was 2887. So give or take, we may have reached and hit the target on the NASDAQ 100, and if that's the case, you could see it come back up and retest it a couple more times. But this could be it for the NASDAQ 100 based on that inverted head and shoulders. Now the other thing that is interesting as well is to do Fibonacci extensions. So from this high that was on the 11th of April to the low, which came in on the 18th of April, you do your Fibonacci retracement levels, and then you add a 127. The 127.20 is a really accurate retracement extension. So putting that extension in, that gives you a target of 2895. So there's good resistance going to be right in this area here, 2889 to 2895. So it looks like probably the NASDAQ could come down here, hold in this area here, maybe consolidate, even down to 2845, up to 2859. So consolidate since it had a big extension move up. And then retest this target zone area over the next few days to a week or whatever. So if that's the case and it does retest, then there's also that high probability that maybe Apple will get through that 450 strike. So Apple could lead this, or the NASDAQ could lead as well. So keep an eye on these things. These kind of patterns tend to play out, and if you're going to do trades up in this kind of zone, to find your risk, and the best way to do that is with options. Good luck. I hope this helps, and I will talk to you on the next video.